Brad Williams, Frugal Finance. Here's a quick overview of bonds. Brush up on bonds, interest rate changes and duration. Do you own bonds or have money invested in a bond fund? If so, take time to brush up on two factors that can impact bond prices and fund returns: interest rate changes and a bond's duration. The two are correlated. A well-known maximum of bond investing is that when interest rates fall, bond prices rise and vice versa. This is also referred to as interest rate risk. And some bonds are more sensitive to interest rate changes than others. That sensitivity is known as bond's duration. That's not to be confused with the bond's maturity, which is simply the date on which a bond issuer must repay the principal of a bond to the bondholder in full. Generally, the higher the duration, the more sensitive your bond investment will be to changes in interest rates. Let's dig a little deeper. Bonds and interest rates. Why do bond prices tend to rise when interest rates fall and fall when interest rates rise? Let's say you paid face value for a $1,000 bond with a 10-year maturity and a 6% coupon or annual interest rate. Now, let's jump forward. If 1 year later, interest rates have gone up and a comparable bond is issued with a 7% coupon rate, suddenly the bond you're holding looks less appealing to potential purchasers. In this instance, if you wanted to sell your bond before it matures, you might need to offer it at a lower price below face value because investors would now expect to be making a 7% return for investing in that security. This means you might want to sell the bond at a discount to attract a buyer. Conversely, if interest rates decline, buyers should expect to pay above face value for your bond if you sell it before maturity. If you're a buy and hold to maturity bond investor, interest rate changes might have little or no direct impact on your fixed income assets. The market price of a bond doesn't matter much if you aren't looking to sell. You locked in a return that you were presumably satisfied with at the time, and fluctuating interest rate levels don't change. That means if you buy and hold, you don't care about this. But if you're a trader, there's a lot of issues related to interest rate movements. Duration details. A duration is a rather technical aspect. This explanation is pretty standard. If you want more details in regarding duration, check out my YouTube video list under bonds, and I'll have the quantitative side, the math related to duration. Bond duration is a measure of the degree to which a bond's investment is likely to change in value if interest rates were to rise or fall. The higher the number, the more sensitive your bond will be to changes in interest rates. Generally speaking, for every 1% point change in interest rates, a bond will rise or fall in the opposite direction by an amount equal to its duration number. For example, if a bond has a duration of 10 and interest rates increase by 1 percentage point, then that bond's price would be expected to decline by approximately 10%. If interest rates were to decline 1 percentage point, the bond price would be expected to increase approximately 10%. Calculations used to determine duration generally take into account a number of factors, such as how much interest the bond pays during its lifespan, as well as a bond's call features, yield, and time to maturity. In the calculation used to determine duration generally take into account a number of factors, such as how much interest the bond pays during its lifespan, as well as a bond's call feature, yield, and time to maturity. In general, the higher the coupon rate, the lower the duration. The longer the maturity, the higher the duration. To find a fund's duration, look at its fact sheets, which you can find on the fund's company website. The duration can often be found in the bond holding statistics, key facts, or portfolio data sections. Finding the duration of an individual bond can be trickier. Start by asking your investment professional or brokerage firm. Keep in mind that just because a bond or bond fund has a low duration doesn't mean it is low risk. In addition to duration risk, bonds and bond funds are subject to credit risk, inflation risk, call risk, and other risk factors. Comment if you have any questions, concerns related to this subject, duration, interest rate changes, bonds in general. Brad Williams, Frugal Finance. Hope that helped. Thanks for watching. See you soon.